Morning, everyone. It's Phil Wade from Dalton Wade Real Estate Group. We're conducting our Saturday morning training session. Today we have with us Clarence, Micah, Wilfredo, Michelle, Lisa holding the camera, and our special guest speaker, Cherise Candlish.
Good morning.
So we're going to turn it over to Cherise, and then I encourage everybody to ask questions of Cherise. If you're on Periscope, you can just type them in, and Lisa's going to keep her eye on any questions. And then at the end of the session, we're going to do a little Q&A. All right, take it away, Cherise.
Good morning, everyone. Thank you for having me. I haven't spoken on Periscope before, so this will be a new experience for me. So thank you. I wanted to tell you a little bit about myself, just so you know who you're talking to on the other end of the phone. I'm a third generation in my family real estate professional. All four of my grandparents owned their own real estate brokerage, similar to yours here when I was a child, and so did both of my parents. And back in the day when I was growing up, the multiple listing service wasn't quite as up to date as it is now. The realtors in their office used to receive their expired listings by mail in packets like this on a monthly basis, and we would take out the listing sheets and replace them on a monthly basis. I would get a penny a page, and that's how I earned my spending money. So from childhood, I've been involved in the real estate process, and hopefully have seen enough over the years that there's not a lot that we'll experience together that hasn't come up over the years. So hopefully I can help you with things and maybe avoid some frustration in the process. So with Interlink, I'm with Interlink Mortgage Services, and we're based out of Safety Harbor. I'm with the Southeast region, and we are a triple agency lender. In other words, FHA, VA, conventional, Fannie Mae, Freddie Mac, Ginnie Mae. We do all of the above, as well as USDA programs for your remote transactions. You all know that your conventional buyers that's your first line of thought. Can I run this conventionally? It's going to be my easiest transaction. The least appraisal requirements, the least underwriting issue. Can I take my buyer straight to a conventional loan? I'm sure that you've all worked with Phil on that repeatedly. It's your first line of thought. After that would come your VA veteran buyer, which we love that program for our veterans with no money down. And then lastly, the FHA program for a more lenient underwriting approach, lesser of a down payment, and a higher debt to income situation. The problem that we have with the FHA loan sometimes, that I know you all deal with regularly, are the appraisal issues. Some of the more common issues that you deal with here would be your lead-based paint. I've got in your flyer for you minimum FHA property standards that come up for you, I think, pretty regularly. Peeling paint, holes in the walls, water stains, looser hanging wires with the electricity, loose handrails. I know that comes up for you, probably very, very common. Rotted wood, tripping hazards, boards coming up from the floor, broken windows, utilities out of date, foundation gaps or cracks, sloping floors, mold, termites, gutters and downspouts, and the slope of the earth and the grade for the property. Also doors, holes in the doors that would have to be repaired. So minimum situations and issues that come up for you all on a daily basis that at some point cause you to address the repairs and who's going to pay for that. I know just last Saturday, while the three of us were sitting at breakfast, Phil got several calls of FHA appraisal issues that were causing major issues with your closings. And if the seller's not going to pay, can't pay, or isn't willing to pay, then what happens to your deal? You as the realtor a lot of times are having to look at a reduction in your commission or contributing to help the buyer with that. Sometimes the repairs are more than your commission, more than you'll even earn on the transaction, so it's not even feasible. And your buyer is a first timer. They don't have any money anyway. That's why they're using the FHA anyway, right? So what do you do in that case? Do you let your buyer start all over? Are they then so frustrated that you lose the buyer altogether? What, in your experience, what have you all done?
I'm working closely right now with a buyer, and he's taking that risk to do the minimal amount of repairs to get it through. I've worked with the lender to have the FHA approval done like a couple of days later so that he can actually get those things. And he's doing minimal amount of repairs, so the risk of losing the property later on is not going to impact him heavily. But we're working closely with the seller, listing agent, and that's kind of a precarious thing because obviously the listing agent wants as much as she can get for her sellers, but there's got to be a lot of trust going on here. So I think it's going to work out. I've got a really good partner, and Phil knows this because we were going backwards and forwards on it, so it's all going through really smoothly right now. So we've got the FHA appraisal hopefully on Wednesday. So this weekend and Monday, Tuesday, it's going to be all systems go to do all of that, the fixing the holes, the window, the rotting wood, and that's going to be cool. So I've got a good situation, but it's, it's not the best, but it's good.
It's touch and go.
Yes.
Absolutely. And then you are held up, your closing is held up until all of that is done, correct?
Yeah.
Okay. What we would like to propose to you is what's called an FHA 203K Limited. You've all heard of the 203K. This is...
Maybe you can just touch base on the 203K.
Okay. Okay. The 203K is a major rehabilitation program for the home that your borrower is looking at. It will go up to the FHA maximum loan amount for the area of $271. What I'd like to talk to you about today is the FHA limited 203K, which is between $0 and $30,000 in repairs on the property. And in my experience in talking with most of you, that's where your repairs have come in. They've been on a smaller end.
Now is the limited the same as the streamline?
It is a streamlined process, absolutely. That's why it's limited.
So they're kind of synonymous,
Yes.
the naming.
Right.
Because that's kind of what I've heard, 203K streamline and then 203K. So the limited is...
It's also a streamlined
Right.
process, absolutely. Another reason why that's so attractive to you, because it is streamlined, it's much less stringent on your borrower. It's the same FHA leniency in underwriting, the same leniency in debt-to-income ratio, and the same minimum down payment, 3.5%.
So basically, it's just another loan.
It's an FHA loan,
Just for
exactly, called a 203K Limited. The repair amount is between $0 and $30,000. It's actually $35,000, but you have to leave enough in there for the contingency, which is 10 to 20% of the repairs that will be done on the property. So for instance, if your repairs are $15,000, we would need to hold back an extra $1,500 just in case, absolutely, to cover
Can
the
they
higher
only
cost.
get this if they're already doing an FHA loan?
Yeah.
Okay.
This would be the loan that they would apply for. If we needed to convert it, we could, absolutely. We could convert a regular FHA loan to an FHA 203K Limited. But yes, it is an FHA loan. The beauty for you as the real estate agents is, for instance, these situations that came up last Saturday, if you know that that's going to be the situation, you write up your offer. These are the repair situations. We handle the repair with your buyer. You don't have to be involved in the repair process whatsoever. So you close on the home as is on your closing date, and within 30 days then the repairs have to start. So within 30 days to 6 months they have to be complete, but they have to start for your buyer within 30 days.
There's actually two closings, as I understand it, there's, or even more than two potentially. So there's the initial house, as Cherise said, and then the repairs get done, and then there's additional closings after that. Is that correct?
On the limited, it's one.
One.
On the standard, you're absolutely right. On the limited, it's one, but then there are disbursements that the buyer approves to the builder.
Now, does the limited still have a facilitator involved in terms of working with the buyer?
Yes, and that's us. At Interlink, we actually have, or I actually have a team of renovation specialists. One was a general contractor, the other was a realtor builder, commercial builder. So they're my renovation team.
If they want to use if they have somebody that they would like to use, that would maybe be cheaper, but it's licensed and everything, is that fine? Is that okay, or does it have to be?
It is okay. The person has to be licensed, they have to be insured. They have to, for loan purposes, the buyer will have to pay reasonable cost for the repair. They can't. If their parents are licensed and they're insured, they can absolutely do the work, but they can't give them mom and dad's rate. They have to give them a standard going rate. So anything that is not spent, that is estimated, will come back off of the loan balance. It'll be a principal reduction. So for instance, if they base the loan on 3 estimates and mom and dad are licensed, mom and dad do it, and they reasonably charge a lower rate, then whatever is left, including the contingency, will come back off the principal amount of the
And what
loan.
was the max that goes up to again?
$30,000.
And then the total is $271.
The FHA maximum for the area, yes, is $271. But on the limited, the amount that you can use for repair is $0 to $30,000.
How difficult is it to convert like if someone just went regular FHA then into sort of the limited streamline?
The challenge would be, will the property appraise for enough for these repairs? For instance, let's use $100,000 because that's easy. Here's a $100,000 home. It needs $15,000 in repair. Will it appraise for $115,000 after these things are done? Because they're not structural. We're not adding on. We're just improving. So that's what you would have to keep in mind: is this house really going to be worth $115,000?
And how do we
Those are
know
done.
that?
We do the appraisal at the time when you make the offer, and ideally these homes that are needing, those upgrades, the price I would think should reflect that.
Right.
Any appraiser knows to add in the as fixed sort of price to come up with the appraisal.
The FHA appraisers are
Right.
trained to do
do
that.
that, right,
Yes, yes. So-
Are they made aware when they go in to do this appraisal that we're looking at making these improvements?
Absolutely.
So please, take this into consideration, because maybe a roof is on the line, so maybe it has 3 years left. You know what I mean? But you
Yes.
think it's on the line, so you're preparing.
Yes.
Or the AC, it's at the end of life, so maybe you want to put that in the loan.
Absolutely. And why wouldn't you? If you could, that's another good point with the loan, is it gives the buyer the opportunity to have the home they want improved the way they would like to have it improved.
And then go back to what, again, these FHA folks typically don't have a lot of cash. So if the roof is older, the AC is getting to the end, if those things start to fail, they may not have the funds.
That's right. Appliances can be included in this.
So the big ticket items also are included, you're saying?
Absolutely. What cannot be included is anything that has to do with the structural foundation of
And
the
roof
home.
doesn't count as that?
No.
So you can do the roof.
Yes. Yes.
But again, so say you started with somebody regular FHA because you thought, I can, this is sort of, because it's always, it seems, like on the borderline of like, is it gonna go or not?
Yes.
And then if it goes, that's good, right? But if
Yes.
it doesn't, then can it be converted once you've already sort of,
Yes.
you just have to have it reappraised?
Well, we would do the addendum to the appraisal to change the condition.
Okay.
Absolutely. So, but you already have your FHA appraisal
Right.
in file, so.
How much
And then
more
do you go back to
expensive?
the appraiser and say, now with these new conditions, what would it appraise at? And since they've seen the house, they can answer that?
They would do the addendum for the as completed price, absolutely.
And what's the cost for that? Is there an additional cost to go back to the appraiser for that?
There will be, and it will depend on the appraiser that goes, but the additional is usually between $175 and $275.
Is electric and plumbing in there? Because we see a lot of houses that aren't grounded, but they still have 3-prong outlets. So
Absolutely.
that's, so you could do, if you have galvanized plumbing, for example, is that something that can go on
Yes.
that list?
Yes,
Okay.
absolutely. And we recommend those things. Why not maximize the program?
So basically, the foundation is not free.
Correct.
Okay.
you
Or
could-
cosmetics, right?
No, cosmetics, absolutely.
Yeah.
Oh,
So if
okay.
you want new
That's what
cabinets
I'm-
and counters,
You
that's
couldn't build out
Absolutely.
another room though, right?
No, no.
What kind of
Foundation.
credit score are these people looking, or what kind of qualifications are there for somebody to get something like this?
For the loan, your regular FHA guidelines as far as debt to income, employment, time on the job, credit, down payment, 3.5% down, and it can also be gift funds from family, so it's a fantastic opportunity.
I know a lot of lenders have overlays on the FHA kind of base, base if you went on the FHA website in terms of what they do or what they say they do versus what actually happens. Maybe you can speak on your company's overlays and sort of how all that works for everybody.
As far as the,
Well, sometimes some lenders need a higher credit score than others, so maybe.
okay, we prefer a 640 credit score, especially, actually, in this situation, you're going to have a 640 credit score to get it through. One of the things that I enjoy personally is helping your buyers to reach that level. We do a lot of credit help. We deal with a lot of credit repair specialists and enjoy taking them to that next level and helping them to get to that position.
Now, are you lower if it's just a regular FHA, or are you 640 across the board?
640 across the board.
Does everybody understand what that means and how that works?
Well, there's the FICO one, and then you're
Oh,
talking about
there's,
the other one?
right, but, okay, so there's, we love Cherise. But you might have somebody, right, that's 620, there might be a lender out there that will still be able to get them an FHA loan, so.
On a case-by-case basis, I'm able to do that. And so I'm hesitant to just say I can do an under 640 credit score. It would have to be justified. There would have to be some other compensating factors.
Extenuating circumstances.
True, true.
I'm just reading through these, and
True.
even fences, to repair fences,
Mhm.
is included.
Mhm. Yes. Should we go over the list? Let's go over the list, because I think that you'll all see some things here that would really work for your borrowers. Just even last weekend, I think, in the past couple of weeks, we might be able to have saved some deals for you. The health and safety, like you've talked about.
Mhm.
Repairing or replacing wells and septic. A lot of times you have to hook up to community water, the public services. Definitely we can do that. That's a very costly one too, that no one wants to pay for. So, repairing the plumbing, heating and air conditioning, making changes for improved function. Now again, we can't add any rooms, can't add any square footage to the home, but we can certainly put in new countertops and new kitchen
You
appliances.
convert a room to a bedroom though, but not add anything.
If we didn't have to make any structural changes.
Like knocking anything down, you mean?
Right.
Yeah.
Eliminating obsolescence, the new roofing, like we talked about, provided the structural integrity will not be impacted. Again, we can't do anything with the structure on this limited. On the regular 203K we could, and that's another program altogether that we might want to talk about down the road. But this one I think would just save so many deals for you that it's worth spending a little time on. Okay, energy conservation improvements. Accessibility for persons with disabilities, that's a big one with FHA. Installing, repairing the fences and walkways. Another one is a swimming pool. Filling in the pool or repairing the pool. Smoke detectors, patios, covering lead-based stabilization costs. So I think that there are a lot of opportunities for you all with $30,000 in repairs that can be done after the closing that you can see going in, where this might save some deals for you. The processing time for it is the same because those repairs aren't being done before closing, they're being done after. The closing time is the same. It's very safe to say we could do these deals for you in 30 days, maybe even quicker, but 30 days would be a standard rule for you.
That might be why somebody would want to go with a contractor that they know, just so that they know to maybe get done faster or something.
True. But that's not going to hold you up from closing.
No.
Your closing will be done within the 30 days, and then we will take it from there, work with the borrower and their contractors and handle the disbursements.
Awesome.
So they can close with the seller
Yes,
on time
yes,
and still have all of these FHA requirements outstanding.
yes.
So the seller is now out of the picture,
So are you
and then the buyer can just work directly
with us.
Where's the easy button?
That's easy.
Yeah.
because
Yeah.
that's good information. I like that.
It's really a great tool for you all, and I had planned to talk about the larger program, but as I thought about our experience last weekend, there were at least 2 phone calls that Phil received of agents who had FHA issues that weren't major, but they were causing the deal to blow up. So why not even take it the next step further and have new flooring, new cabinets, redo your kitchen and your bath, so that if you're, not structurally, but cosmetically, so that when they go to sell, they've already got built-in equity. You know, we all like to focus on the kitchen and the bath, but why not give them that built-in equity right off the bat?
So the 203K has to be applied for before the closing with the seller.
Right. That's the financing that they are applying for. There may be situations when we're flipping a regular FHA borrower into a 203K because we didn't see the situation up front. But that can easily be done.
So they basically just have to qualify with the
For
same
it.
guidelines for the higher amount,
Absolutely.
and then it's easy.
Absolutely.
What about for like someone going VA? Is there anything for them on the rehab side out there?
I'm not aware of a VA rehab loan. Not that there isn't, but I'm not aware of one. This is the least down payment
Is there any,
rehabilitation loan that I'm aware
so
of.
if someone, you know, because obviously that 0% down is very attractive, but if they like the house and they know they can't purchase it because, I mean, the VA requirements are very similar to the FHA, or are they the same?
They're very similar.
Okay,
Yes.
so again, that house that's got issues, it's not gonna be able to go VA, so maybe, you know, you could suggest to your client, you know, 3.5% down instead of 0.
Mhm.
Are there any other sort of drawbacks to FHA versus VA?
There is the debt to income ratio is different on the VA.
Okay,
There's
yeah.
only the end ratio. But it doesn't come into play very often that a veteran will max out his complete borrowing ability just on a house payment. That doesn't come into play very often, right? So there aren't a lot of differences there, other than the VA doesn't have the monthly funding fee like the FHA.
Does everybody know the monthly funding fee, what that is
For VA, you mean?
for FHA? If you
Okay.
can mention that.
Included in your payment on the conventional loan, you have PMI, private mortgage insurance. With FHA, it's called MIP, mortgage insurance premium. Your borrower pays it up front and in their monthly payment as well. It's 0.85% of your mortgage, of the mortgage divided by 12. That's how you come up with the amount that they pay on a monthly basis.
And then is the funding fee, is that rolled into the loan, or is that?
Absolutely. Yeah, the VA funding fee and the mortgage insurance premium,
The FHA?
both on top.
The FHA
Right.
is rolled into the loan.
Right.
So if you, and what is the rate of that?
The upfront is 1.75, and then the monthly is the 0.85 of your total loan divided by 12.
Does everybody understand that? Okay, so there's a 1.75% fee that your borrower is gonna have. So if you borrowed 100,000, he's gonna actually start with a loan balance of 101,750. Because that's gonna get rolled into the loan, and then he's gonna pay $850 a year divided by 12 for mortgage
Monthly
insurance.
mortgage insurance. And that mortgage insurance, so you all know, if the borrower defaults, something happens to your borrower and they default or they pass away and there's no one there to take care of the home, the mortgage insurance premium pays that default to the lender. That's why that exists, so that people can buy with 3.5% instead of 20.
Good.
That's my case,
I-
the VA.
Fantastic.
Yeah.
Fantastic. I'm not aware of a VA renovation
No,
loan,
no, I don't think.
but I'll research for you. I do feel like, however, for all of you and just my brief experience with you, that this allows you to really deal with some recent situations that you've had come up. So maybe give a shout out to those people and look back at that house and see if with between $0 and $30,000 if we could help you.
We'll definitely give some incentive,
Mm-hmm.
even if maybe they weren't considering this house. Maybe it would make them consider it, like if it was too much that they weren't up for dealing with.
Right.
It might open up even some different selections to choose from.
One way that we present the other program, the larger program, to people is if you find the right location for your client, but the home's not ideal, this is a way to make the home ideal. You know, you can't knock out walls with this smaller one, but you can paint and repair the windows and put in a new roof.
203K.
Yes.
Limited.
203K limited.
203K.
Yes.
You could even get like hurricane windows if it fit within the 30,000 or whatever.
Right.
Cool, maybe we can move on to the trade and talk a little bit about what you're seeing with that.
Okay. All right.
Maybe give a quick overview of what that is.
Okay, the TRID guidelines, as you know, were implemented to protect the borrower from surprises and things not being disclosed properly. So at Interlink, the situation started to be addressed long before the new guidelines were put in place. So we haven't been as affected by it and are very happy that we don't have to affect all of you with that as well. We're continuing to run 18 days from submission to closing with our transactions. So, you know, we take that disclosing very seriously. For instance, the minute that we get your application and the purchase agreement, we're disclosing to your client so that your closing can still occur within 30 days and 18 in some cases.
And that's both conventional VA and FHA?
Right, right. Now, not to say that there won't be appraisal issues that will hold us up, or that there may be something unforeseen on a credit report, or an employer doesn't get back on time. But barring some unforeseen instance, we're averaging 18 days from submission to close, so happy not to.
So 30 days.
Very reasonable. Happy not to hold anyone up.
Great. Well, Cherise, thank you so much. If anyone, would like to get in contact with Cherise, I have her contact info. You can just email me or call me, and I will forward on her particulars. And we appreciate her taking the time to chat about a couple of things we all might not have known of. Does anyone have any questions? Anyone on Periscope have any questions?
Thank you all very much.